Whoa, welcome in 2022! What a long break it was from publishing on the Blockrevision, but finally we are back. So after 1.5 months of a break from publishing, Blockrevision is right here, right now with regular publishing. So I'd like to announce that from now on there might be much more quality content on our series, and I would find that now, either you are a trader or investor or any other type of a market participant, you will find something for yourself, and there might be new sections, new segments, everything you'd like to see. So before we start and get to some 2022 data to analyze, I'd like to make a quick recap of what happened in 2021 and what the next year may bring to us. So I'm very glad to have you here once again, and yeah, let's begin. So at first, let's have a look at charts on a monthly basis that may be a reference point in terms of conclusion, making conclusion where we are right now at the market cycle. So at first you can see the DXY, that is a US dollar currency index. So here you can see that DXY is right now reversing after making this double bottom formation on that accomplished it on May of 2021. So right now, after this reversal, we don't find any signs of reversal yet. So RSI is not oversold. It's still at healthy 50 points. 50 points, and may get even up to 60 or even up to 70 in the coming months. So with this bull run start reversing on US indexes, or rather maybe not US indexes, as US indexes are still rising, as we will find in a minute, but with I would say risky assets turning into a more choppy phase than it was before May 2021, we can find that with this one, DXY is showing strength and showing that lots of capital is returning back to the queen of currencies. So right now, DXY is one we need to look at. Possible resistance we may find at this level, but I would find rather to have DXY a choppy moves a little bit sideways rather than a stronger pullback. However, on Euro US dollar chart, we may find that that's typically something that we may call a head and shoulder formation that has been formed and accomplished on August 2021, and right after this we may have got a correction that has brought us down to 112 in terms of those currencies ratio, and we are right now facing a very interesting in terms of volume profile moment where we are approaching point of control, where the chart may find some difficulties in crossing those areas, as lots of volume has been generated in the past right around these areas of 110, 112. So it's interesting point to observe, and there might be also some kind of trials of reversal soon. Let's get into another one, 10x, that is CBOE 10-year Treasury note yield. Right now is heading to recent highs of 168, and the more macro high, more macro top that was at 177 on March 2021. So right now, I would say that we are still in a bear market in terms of treasury notes, but some economists claim that 2022 might be a year of treasury notes being risen. So we may observe this top being overtaken, being crossed, and we may reverse the bear tendency. Now let's have a look at percent of stock above 50-day average, and right here you can find it in the recent year 2021 that started right here. We have gradually started to move into a bear direction, where percent of stocks above 50-day average is going down. So it means on risky stocks especially, we find this tendency is descending, so we are getting closer and closer into a bear area. In terms of put and call ratio equity CBOE, we can find that speculators are still in favor of a bull. So recent months, especially since beginning of 2021, we can find that tendency still favors the bulls. So it means that most speculators are favoring growth on the market. Right now let's have a look at VIX indicator that is showing up the amount of fear that is at investors, and we can find that after these choppy recent months, we are still in a very quiet territory of 1670 points on VIX. So it means that the market is trying to quiet down after this hectic time, and right now is getting back into a more and more calm territory. 2021 was also a year when we started to see a skyrocketing inflation. And this index, iShares TIPS bond ETF, showing us where speculators are betting for or against higher inflation. So right now we are peaking at 150 points on this index. That is the macro top on a index that has been noted since 2004, and right now I would say there might be some tendency to calm it down, but we are still too early to say it was already the top, as 2022 is telling us that we may still struggle with surging energy and gas prices, as well as food prices. So also commodities are increasing in price, so it means now the TIP might be even higher from here, but right now we find a consolidation that has been started in July of this year. In terms of M2 money stock, we can find that the pace of money being put into economy is still surging, and the angle of the growth showing us that there is no really serious correction being forecasted in the next future. We have seen major surges during this pandemic outbreak, and also during this lockdowns time during February and March of 2021, that also has converged with a euphoric phase on some stock and crypto markets. Right now, let's jump into US indexes, and right here you can find that Dow Jones Industrial Average Index is showing us the strength. The strength that after this choppiness on the beginning of April of 2021 is turning into another phase of growth. As we can find, we are trying to take off from the ground that has been set on 33,580 points. So on a weekly chart, Dow Jones is still surging, and during the time of the beginning of 2021 till recent times, it has surged around 19%. That is astonishing as for Dow Jones Industrial Average Index. So it was very good year for this index. And if we may have a look at the next one, that is S&P 500 ETF Trust, we can find that it has risen even higher, up to around 26.7%. So it was absolutely great year for every investor that has trust into US stock market. It's another index of SPY. Right now, US 100 is opening a year with a firm surge. So right now, as we just have a look at recent year, since January of 2021, it has surged for nearly 27%. That is absolutely great for Nasdaq. Russell 2000 index. Russell has got through a bit worse year than it was in 2020. So right now we can find that with this one performance, Russell has gained even up to 23%, but on November it has pulled back down to 13% at the end. So it's not very bad, as we say, for Russell 2000. It was even one of the outstanding years for Russell 2000, but for some investors it was even higher appetite of Russell 2000, even trying to go with some forecasts 3,000 points. So the beginning of the year was fantastic, but right after this very bullish period on February, we have entered a choppy period that is lasting through the whole time. In terms of emerging index fund, we can find that MSCI is showing us that emerging markets are turning into a little downtrend, or maybe a correction that is right now showing us 18.6% of a pullback. So it's still in a range of a possible correction, but I would say that the pace of this downtrend is showing us that we may turn into a bear side, especially after crossing this very important level of 46.14. So it's interesting to find out how that will happen, how that will end. Right now, I would say MSCI Emerging Index Fund, it's still not threatened by a bears, but we need to show some strength about this point on a chart. So exactly, MSCI is right now in a more sideways phase. Australia 200 is showing us, however, that after this very strong, I would say, a pull of a flag, right now we are trying to break out from this 7,620 points, and this year is showing us a very relative, very good relative strength. So it may become obvious that we will cross through this level. So Australia is in a bullish territory, and we are jumping into another index. China A50 has disappointed a lot of investors that were betting on a surge of Chinese indexes. So after this very hectic period by the February of 2021, right now we are struggling with a strong correction that has brought a correction of nearly 30% since the top. So it means we are still handling this very strong support of around 15,000 points, exactly 14,750. But right now the strength of this index is still need to be confirmed, and we still need some power in terms of reversing above 17,000 points. So China A50 is still in this I would say boring territory, and needs another catalyst after this Evergrande affair that happened in the second half of 2021. As of next is DAX 40, that is a German index, and right now German index is after this strong sell-off on November of 2021 is trying to overtake recent highs on made on 18th of November, and as we can see, with a higher volume than it was right back in the beginning of November, we may get a firm breakout from 16,258. So German index is entering the new year with a relative strength, and we may see even crossing 17,000 points in 2021 if no very firm bear catalyst will occur. Right now let's have a look at India 50. So right now we can find that on India 50 there was a nice correction that has corrected around 12%. So it means it's not very worrisome for investors, and India 50 may be one of those indexes that may surge even higher in the following months. In terms of Nikkei 225, we can find that we are still defending this area of 27,000 points, but in terms of a top that has been set on 1990, we are still far from those levels. Will this bull market get us right over there? It's still too early to say, but this time of November of 2020, where we have crossed those long-lasting trend line, bear trend line, we can find that right now we may be in another phase of anticipation before stronger move upside. Taiwan, however, is crossing through very important resistance, and right after breaking through this 19,000 points level, we are entering another phase of a bull run that may get us even up to 19,000 points in the nearest future. On UK 100, FTSE 100 index, we can find that we are trying to overtake the highs that has been set before this pandemic outbreak, and we are strictly following a 7,700 points path. Right now, let's have a look at commodities, and right after this strong pullback where we have gone through on October and November, we are trying to build up another time of growth, especially right after this flag formation being built, and with this new volume come up, we may see that the commodity still have 2022 good year ahead. Right now, let's have a look at gold, and gold is right now, I would say, moving sidelines into this triangle formation with this one false break, but there is still time to decide for gold whether it's going in the initial direction of a grow or going to the south. So right now gold is not very I would say interesting in terms of investment purposes, but I would strictly observe this asset as it still has potential to grow. Let's have a look at WTI, that is a crude oil, and we are crossing firmly another important resistance that has been set on 76 bucks. So it means that after this very strong sell-off that has been made by lots of margins on US oil market, we trying to reverse the tendency and get back to recent highs of 85 bucks. As lots of analysts say, there is still possibility of US crude oil being seen around 100 bucks area during the 2022. Here, however, on VB to VV ratio chart, that is a Vanguard small cap ETF stocks to Vanguard large cap ETF stocks, we can find that we are trying to find a floor where we are getting back to 1 point level area. So it means we are getting back to this neutral territory where VB, that are Vanguard small cap stocks, may find floor and may find a bottom before the next surge to upside. However, with interest rates being forecasted to hike in 2022, it might be very difficult for small cap stocks to take off from the ground and maybe try to replay the situation from the second half of 2020 and beginning of 2021. So it might be interesting to watch, but I would expect VB to VV to stay at this area for a bit longer. Another one index is VUG to V2V, so growth to value ratio, and right now we have on November has has equaled the highs on 227. So it means it might be difficult for growth stock to cross through this level, especially as it's been tested twice and rejected every single time. So I would say that growth stocks may have a little bit pause in terms of performance in the next period of time, unless it will try to reverse the tendency in the coming weeks and then try to attack this ceiling in the coming time. So growth stocks still have a room to grow, but I would say it's limited by the ceiling in the coming future. SPAKs, ETF on SPAKs is trending lower since February of 2021. It's showing no signs of reversal yet, as we are making lower lows and lower highs. However, let's have a look at major US stocks, and micro NYSE FANG plus index futures is showing us that FANG is still performing very well. However, on RSI chart, we may find that there might be more difficult time ahead, as we have quite difficulties in crossing through this 8,000 point area. It's also psychological barrier, so we may chop in this area between 50 MA and 8,000 points for a while still. On the Apple chart, we can find no signs of reversal yet. We're still in a very strong uptrend, and as we can find, it may get us through an euphoric phase in the coming months, as this chart is showing us kind of a speed up, kind of an acceleration to upside. So just since November 1st, we have already made 22.4%. So it's astonishing pace of a growth for this major US stock. On Amazon, however, we are what we can see is this quite constant growth and still respect of 50 MA moving average, exponential moving average. It would mean that Amazon may prepare for a next leg to upside, and this I would say this ATR going down to 160 area may get us back to another chance of a growth in the coming weeks, especially as we are trying to form kind of a flag that usually is a continuation pattern that could repeat previous major ride in 2020. What's in it for Tesla? Let's have a look. Tesla is breaking out higher, so there is no very good time for sellers, no very good time for bears, as Tesla is not showing any signs of a breakdown in the coming months, in the coming weeks. So we can find this year starts with a high volume, showing us that might be also another period of a growth for this company. So on a monthly chart, Tesla is a beast showing us a real strength of Elon Musk, and right now there is no serious threat to this company. For Meta platforms, right now we can see that after this quite strong correction, we still not have much of a strength to push the stock higher. We are right now sitting at 12% correction since top, and correction has got us down to around 20%, and I would say it's still a healthy correction, as we have held this recent resistance that has turned to support, and right from here I would say there is a still high probability of moving upside, but Meta platforms need to show some strength at best in the beginning of this month, as January is typically a very good month for stocks. However, for Google, for Alphabet, we can find that we has topped out, and right now struggling with crossing through 3,000 points area. Right now Google is trying to find a base around this area with some choppiness, and with this 100 EMA as seen on daily chart, we can find that we are still in a uptrend mode. However, RSI is showing us that we may see a breakout in the coming weeks, as we can just draw it up. There is, as we can find, descending wedge that normally is from technical standpoint should send us higher. So Alphabet is one to watch in terms of few weeks period that supposed to take us right above 3,000 points. On NVDA Corporation, however, we have crossed through 300 points. Let's have a look at recent period of time. It was enormously great period of time for NVIDIA, and since January of 2021 it has nearly doubled. So NVIDIA is one of the beasts of this bull market. Right now let's have a look at crypto, and crypto is right now struggling, but probably crypto hasn't said a last word in this bull market. So right now we are trying to cross on total market cap this 2.4 trillion barrier, but it has been rejected once, and we have this long week that is getting us down to 2 trillion bucks. Yeah, so with this 1 week it may still be very difficult for crypto total market cap to cross through another important barrier and a resistance on 2.4. So at first we may get down to this 2 trillion area, and right after this we may try to get back to another milestones, and once again crossing through 2.4 that may send us very quickly back to 3 trillion bucks. On BTCUSDT we have some problems. We have some problems as a recent trend line is not very firmly accepted, and right now we are struggling with crossing through even 49 K USD. So it means we are still in this sideways mode that may show us much more choppiness from here, but with this one bearish week we may find a possible retest of 41,000 in the nearest future. And defense around this area is very important to remain a bull on the advantage. So I would strictly observe this area, whether to enter or whether to exit the market, as I'm also exposed to some cryptos. On Ethereum, however, we are in a better position, as we are inside of this descending wedge that from a technical standpoint it should send us higher. Right now we are also sitting above this 0.618 Fibonacci extension, and it means there might be a very strong support around 3,500 level. So I would observe Ethereum right now and stay on the sidelines. In terms of market cap and BTC dominance, we can find that it will be quite expected from BTC to BTC dominance to jump again to 45%, but as we can find, we may be still in this mode of a altcoin bull season, and if that will happen, we may see a possible breakdown to the downside, and possibly still some strength to be seen on altcoins market. So in terms of altcoin index, we are still struggling with crossing through this lower band of a channel. Right now, very important for me is to cross through this 5,000 points area. Without this, I wouldn't expect bull market to extend, especially that after recent trial of a cross, we have failed. So right now the expectation for altcoins is to move downside at least to the 4,000 points area that where we have our support there. And with this scenario, I would expect also Bitcoin to pull back a bit and altcoins to being hit harder, even harder. In terms of mid-cap index of altcoins, right now we are also struggling, and it doesn't look very well. However, we started forming possibly higher highs, higher lows formation, so it may be a trial of reversal to an uptrend, but it still need to be confirmed, and we need higher highs above 3,689. In terms of shitcoin index perpetual futures, I would expect this one, after this recent sell-off, to test out this trend line. So I would for now expect a little pullback, but if we get through this 9,000 points area, there might be a chance of return return of capital to some more risky assets on an altcoin index. So NFT platform index has topped out on November. Right now is going sideways, but it still has some chance to make a macro top in 2022. Right now, I'd like to make a quick recap of what has happened during recent times, and President Biden's first 100 days has been best since Johnson, and brought us a return of about 9.1%. Another one, right now we are in the environment of the fastest bull market to double off the lows. So this navy blue curve is symbolizing the growth in time of S&P 500, and we can find it doubled off in around 1.3 years. So it means it's nearly double as quick as it was during recent crisis and recent bull market that started on March 2009. So we can find the market cycles are getting quicker and quicker, and the recent one was historically the fastest one. Another tendency is this S&P 500 index all-time highs. We have noted 69 this year, so it means we are in this environment where just 1995 was one of the year that has noted more tops than recent one. So it was astonishingly well year for US indexes. All right, so that's it for now, and I'd like to invite you to another section of today's published videos that will be forecasts for 2022. And prognosis for 2022 for stock markets, commodities and cryptos will make tomorrow, so subscribe to the channel if you haven't already. See you there and have a nice day.